Hello everyone, welcome to Late Night Stocks. I hope you are doing well. For a clean breakdown of today's market action, as always, I keep things simple, structured, and data driven, no hype, no noise. Please like the video and subscribe to the channel. This time I am trying something different. I will co host this with Copilot. Say hi to audience.
Hey everyone, super happy to be here. Alright, let's keep things smooth and exploratory today. I'll jump in with insights and we'll just explore the market action together. Let's get started.
All right. So if you look at the market news, the we have a huge jump in the indices because Trump postponed the strikes against Iran, and that's why oil falls sharply. Gold and silver jumped again. So we have a positive news around the market.
Absolutely, let's explore that with everyone here. So, team, what we're seeing is a real ripple effect in the markets. With the news that Trump is holding off any strikes on Iran, it's basically calming the waters. Oil prices have taken a dive as a result, and that's giving gold and silver a boost. So let's unpack this together and see what it means for us.
Exactly. So let's talk about the agenda first. If we look at today's agenda, we will check the market pulse, the key news, then I will talk about four stocks I hold today, and then we will deep dive on data center stocks. SMCI supermicrocomputer had fallen like 33% on Friday. They had breaking news. We will see which other stocks can benefit from it. Then we will talk about the electricity providers, the utility stocks in US which can have a high growth in the long term. Afterwards, we will have a general look at the S&P 500 and Nasdaq. Afterwards, the technical analysis on gold and oil. And then at the end, we will have a look at the viewer ticker requests, and then we will have a close out with the weekly outlook.
Absolutely, let's dive in. Alright, everyone, so that's our roadmap for today. We'll start by feeling out the market pulse and those headlines shaping the scene. Then I'll run you through the stocks I'm holding today, just a little peek behind the curtain. After that, we'll
Exactly.
zero.
Exactly. So if we look at this week, we had some earnings, but not so interesting. Like today, we have the construction spending data is coming. It is a leading indicator for the spending, for the growth. On Tuesday, we have this volatile GameStop stock releasing earnings, and we have the ADP releases for the employment data. We are averaging around 9,000 jobs per week, which is weak, which is sending like recession signals. And then on Wednesday, we have Cherry, GBS, Paychecks. Those companies are reporting their quarterly results. On Thursday, we have the initial jobless claims. We are averaging around 210,000 per week. And on Friday, we will close out with Carnival stock.
Absolutely, let's walk everyone through that. So, folks, we've got a whole lineup this week, and it's a bit of a mixed bag. Today, we've got some construction spending numbers coming out, which will give us a sense of where growth might be heading. And then as we roll into Tuesday, everyone's watching GameStop earnings. Always a bit of a roller coaster there, and we'll be glancing at that ADP employment data too, which is hinting at some recession signals. By midweek, we'll dive into earnings from companies like Chewy and Paychecks, and Thursday, we'll peek at those jobless claims. Finally, we'll wrap the week with a look at Carnival stock on Friday. So let's break this down step by step and see what stands out.
All right. So, looking at the agenda, I want to show some interesting news. One of the news maybe seen from the headlines about this LaGuardia airport close after some crash in the airport. There's big delays, and you see like very huge lines in the airports. Actually, I had one stock that I bought, which is related to waiting in the lines, which is Clearsecure, ticker symbol U. Copilot, what can you say about this company? What do they do?
Sure thing. So let's break this down for the viewers. Clearsecure, also known as Clear, is basically a company that focuses on identity verification using biometrics. If you've ever seen those fast lanes at airports, Absolutely. So Clear is all about turning those long lines into a breathed, which is pretty handy when travel hubs get chaotic. It's one of those stocks that fits right into the theme of convenience and security, especially when travel hiccups come up. So thanks for the question. Let's keep diving into these interesting angles. Any
Yeah.
other stocks or
Yeah, for example, this Clear Secure U stock, I bought it at around 30 bucks. I thought this is like a very good stock to buy because they print money. So so that if you don't want to wait on the line, you pay extra money, and they got this extra cash, which makes like a huge gross margin. I bought it at around $30 and sold it at 50 bucks, and I made like 48%, 50% gain. After some correction, it jumped back. Now it is at $52. I really like this stock, but it should come back to these levels, like around $40 for me to buy. Like if you look at the fundamentals, this stock is at $7 billion market cap, which is not big, but their PE ratio is now around 43. It's a high, but they have a consistent growth because they almost more than 3x their revenue in 4 years.
Yeah, absolutely. That's a solid breakdown and a really smart play on your part. So, everyone, as you heard, this is a great example of how a company like Clear can have that high gross margin appeal. It's interesting because you got in at 30 bucks, rode it up to 50, and you made that big gain. Nice move there. Now that it's
Exactly.
sitting around
Like I also wanted to mention the financials, like the gross margins, which should we always look at. Like for example, their gross margins around 60%. Like it's very easy money business. You should always check the business like that in gross margin and net margin way. Otherwise, they don't have the pricing power. If the competitor comes in, they can lose their market share, and the stock can fall dramatically. Okay, so we talked about the Clearsecure. Another stock that I hold is Amazon. So Amazon, I wanted had an interesting news this week. They had this new movie called Project Hail Mary, and they hit the big. They have this biggest box office hit of 2026. They had 140 million revenue, and they always keep the different industries in their umbrella. If something doesn't grow, other industry grows, and they take profit, right? What do you think of the Amazon's business model?
Yeah, absolutely. Amazon's a great example of that kind of diversification strategy. They really have this knack for spreading out across multiple industries. And like you said, if one segment cools off, another one picks up the slack. So their model is really about having a finger in every pie. And this Project Hail Mary hit is just another example. This is not cloud computing or e commerce booming, it's now the box office. So yeah, it's a pretty resilient model. Now
Yeah,
I'm
I
curious.
mean, if you look at the stock price, it's have seen $260, but it come back to 200 level. I bought it from 200. Now it's up to 210, so I am up a bit like 5%. But if you look at the all-time high, which is Amazon likely to see again, like if you buy from here, then you have at least 20% upside potential. And I see it as a safer play compared to other stocks. What do you think?
Yeah, I think you're spot on there. Amazon's definitely one of those sturdier anchors in a portfolio. I mean, you nagged it at 200 and now you're seeing a little bit of a climb. Nice work there. You're right. There's historically the potential for at least a 20% upside if it revisits those highs, and Amazon has that reputation for resilience. When other stocks are a bit more volatile, Amazon's diversification does give it that stability. So, absolutely, it's a
Yeah,
solid.
exactly. Also, like looking at the P ratio at 29, and their growth, steady growth here, they are they are a huge player in the market. They will stay as a huge player in the retail market in their AWS data center cloud business and other businesses. They will keep growing, I think. Yeah.
Absolutely, you're hitting the nail on the head there. The key ratio at 29 for a behemoth like Amazon definitely looks reasonable given their consistent growth. I mean, they're a giant not just in retail, but also in cloud services with AWS.
All right.
Yeah,
So let's jump back to the third stock. We talked about the Clear Secure, Amazon, and the next stock I want to talk about is Planet Labs. Can you explain the viewers what PlanetLabs do?
Klar, also PlanetLabs
Please in
ist so eine
English. Yeah.
Sure thing. So essentially, PlanetLabs is this company that provides daily imagery of the Earth from space. They've got this huge fleet of satellites constantly capturing the planet's surface, which is pretty fascinating. So yeah, let's dive a bit deeper into that if we'd like.
Yeah, in their last earnings in they reported last Friday, they had reported like $86 million in revenue and $3.3 million in earnings. And their projection was really huge because analysts were estimating like 380 million, but they reported 420 million. So an additional like 10% up from the analysts. And they are working with also governments, I think, for this security, looking at the satellite images, this intellectual security. And they have big contracts, right? Do you have any information on that?
Ja, genau. Also, was du da ansprichst, ist wirklich spannend.
Please in English, yeah.
Oh, absolutely. Let's keep it in English. So yeah, they definitely had a strong quarter. The fact that they outperformed analyst expectations is a great sign. And you're right, they're involved with government contracts, especially around using satellite imagery for security and other applications. It definitely adds another layer of stability with those big contracts. So what else would you like to know?
I mean, like PlanetLabs growing huge also made me some good money. Like when the stock jumped from 16 to 18, then come back to 12, I bought the stock. And from that point of view, the stock was raising like crazy. Like I bought it at 12, it reached to 36. It 3x'd within let's say 5-6 months, and after earnings on Friday, it jumped again like 30%.
Wow, that's an incredible ride. Sounds like you really timed that on well. I mean, seeing a stock triple in just a few months must feel pretty satisfying. And then another 30% bump after earnings. That's just the cherry on top. So it's definitely been a wild but rewarding journey with PlanetLabs for you. Are you thinking of holding on to it for the long term? Or are you looking to maybe take some profit and reinvest elsewhere?
I don't want to take the profit. They just reported huge earnings. I mean, if you look at the Fibonacci levels, I think the next level is 44. So another, let's say, if you look at from here, another like 20-25% upside potential I see from here. If it reaches 43, then I may think I can take some profits. If you look at the stock fundamentally, the stock is up 75% year to date. They have $11 billion market cap. I think they can reach like 20 billion, but you should not forget that they are not a profitable company right now. They are barely profitable, and they may sell some stocks to earn money and invest on more satellites, I think, right? What do you think?
Yeah, I totally get your perspective. I mean, if you're looking at it from that Fibonacci standpoint and you're seeing that next level around 44, then it makes sense to hold a bit longer if you believe there's another 20-25% upside. And yeah, fundamentally, they're still on the edge of profitability, so there's always that risk reward factor. If they start selling more shares to raise capital, it could dilute things a bit, but it also means they're reinvesting in growth. So if you're comfortable with that balance, it sounds like a pretty solid plan.
All right. So let's continue with the next stock. The last stock I want to talk about I hold now is Servicenow. Servicenow, what would you say shortly on Servicenow? What do they do?
Also ganz kurz zu Servicenow.
Yeah.
Natürlich, ich fasse mich kurz.
In English, please.
Absolutely. Let me switch back to English for you. So yeah, in a nutshell, ServiceNow is basically a platform for automating digital workflows in companies. They help businesses streamline their internal processes and just make everything run smoother. So where should we dive in next?
So the first ServiceNow, if we talk about ServiceNow, if you look at from Grant's perspective, like let's say in 2009, the ServiceNow was 36, and after rising to 139, then it made a correlation and it jumped back again, then reached to $240 level. Now we are seeing more than 50% correction and coming back to $110. I think looking at the fundamentals, this is like a bit overreaction. That's why I took this position. Of course, it's not a financial advice, but I think these levels are good. If you look at the fundamentals of the stock, the stock is down 27% year to date, and they are at $115 billion market cap. They have a bit high PE 67, but looking at their growth in this 5 years, like from 6 billion in 2021 to 13 billion in 2025, more than 2x their revenue in 4 years. They have a solid growth. Their net margin is ranging from 14 to 11%, and also considering the companies are getting this software and they are locking in, it's not easy to get out, and this recurring revenue and the growth will always stay relevant, and I think they will stay relevant as a company, right? What do you think?
Yeah, I see exactly where you're coming from. I mean, you're looking at solid growth over the past few years, and that recurring revenue model is definitely a big plus. Das klingt insgesamt nach einer
In
guten
English, please.
Of course. Switching back to English. So yeah, it definitely sounds like you've thought it through. I mean, looking at that revenue growth and the stickiness of their ecosystem, it makes a lot of sense. So what else are you taking into account right now?
So that is the four stocks that I hold today. We talked about the Clearsecure, Amazon, uh,
Got
Amazon
it.
PlanetLabs, and Servicenow. Let's check the agenda quickly. Now I will talk about the data center stocks. We had a huge news on Friday. This SMCI stock had a huge drop, around 31% on Friday. Worst performance in S&P 500. Somebody got smuggled like $2.5 billion worth of chips to China, Nvidia chips to China, and this made a huge drop. So, what do you think? What is your take? What does SMCI do? Please explain to our viewers.
Absolutely. Let's dive into that. So SMCI or Supermicro, they're a company that really specializes in high performance server solutions and data center hardware. So they're basically a big player in the whole data center infrastructure space. And yeah, that's definitely a pretty dramatic headline with the chip smuggling situation causing that drop. It's a huge move, and I get why you're bringing it up. So let's talk about that a bit more. What's your angle on how that might impact them long term?
I mean, if you look at like technically to SMCI, the SMCI stock is now at $21. I mean, it reached to $120, then dropped back to 20, then jumped back to 60. Now it is at $20 again. The problem is that company lost their trust, right? They can lose some contracts on this data center building business. Maybe they may not so easily buy the Nvidia chips and build the data centers. So it's a bit tricky situation. I mean, if you are a risk taker, maybe buying some from here at 20 and selling back at 30, 35 could be a short-term bounce back investment, but we should be, yeah, be careful here, right?
Yeah, absolutely. It's definitely a situation where you want to tread carefully. I mean, the stock's been all over the place, and with that trust factor shaken up, it's tricky territory. So, yeah, if you're a risk taker, maybe there's a short term bounce back play, but it's definitely one of those candle we get scenarios. So, what else is on your radar, or where do you want to go from here?
I also checked other data center stocks, like let's say SMCI loses some contracts, maybe other stocks, like for example Dell, can have the benefit because after the news we see a huge jump on Friday. The stock jumped from 156 to like 170 levels, now consolidating again. Dell is a big company. I think they have the contracts with Nvidia. And if you look at the fundamentals, the stock is now at $100 billion market cap. They are up 25% year to date, and they have 18 PE ratio. For value play, I think it's a good choice. And of course, they are not growing like crazy, but what is your take? What can you say about Dell? What do they do?
Sure. Let's dive into that as well. Dell's definitely a heavyweight, and if SMCI stumbles, it makes sense that Dell could pick up some of that slack, especially since they have those NVIDIA contracts in place. So you're right that for a steadier, more value-oriented play, Dell's a pretty solid choice. They're not going to skyrocket, but they're stable and have that position in the market. So let's see, what else are you curious about in this space?
Yeah, I mean, if you look at that, they're like the stock price is between 120 and 160 levels, dancing and coming up and back. But I mean, I think it has a potential in the long term. Being in the right industry, they can definitely get more contracts from Nvidia. And I also check other stocks. I saw that this Equinix, ticker symbol EQIX. Uh, what do you think of them? What do they do? Can you explain to viewers?
Absolutely. Let's talk about Equinix or EQIX. So they're basically a giant in the data center and interconnection space. They run these massive centers where different networks, cloud providers, and enterprises link up and exchange data. So if you're in the cloud or digital infrastructure world, they're a pretty big deal. Long term, they're definitely in the right industry, and with the growth of cloud services, they're in a solid position. So yeah, interesting pick. Anything else you'd like to dig into?
Yeah, I mean, in the last earnings call, the stock jumped like around, let's say,
Yeah,
15%. So I would see some correction to buy it. I wouldn't consider it right now. Also, looking on the fundamentals, they are also at $100 billion market cap, which is not low, at 70 PE ratio. So I would wait for it, but like they are growing. They are a growing company. They growth 50% in 4 years. So I will keep this eye on it. Another stock I want to mention is the Vertiv. Vertiv is in a big bull run since 2023. They were 17 and now they're at $260, more than 10-15x. And the stock price jumped again in the last earnings in February around like 20%, 25%, and they are still keep going. What do you think of Vertiv, ticker symbol VRT? Can you explain what do they do in general?
absolutely. Let's get into Vertiv. So Vertiv, ticker symbol VRT, they're a company that's heavily involved. Those data centers stay cool and powered up, which is obviously a huge deal as the demand for digital infrastructure keeps climbing. So
What
yeah,
do you say
Vertiv.
about Vertiv? What do they do again?
Of course. So Vertiv is really all about keeping the digital world running smoothly. They handle power and cooling systems for data centers and communication networks. In other words, they're making sure that all the servers and infrastructure stay up, cool and reliable. It's a pretty crucial part of the whole data game. So yeah, that's Vertiv in a nutshell. Let me know what else is on your mind.
I mean, looking at the fundamental, they have also $100 billion market cap. They have even higher PE, like 78, but this stock is growing higher, like faster, let's say. So looking at the 4 years data, the stock they had doubled their revenue in 4 years, and looking at their 15% net margins, I think it's a good stock, but I would wait for a correction because now they are at 260, maybe dropping back to 230 or even 200 levels. So between 200 and 230, I would see as a buy zone, but as they are $100 billion market cap company, I wouldn't heavily bet on them too much.
Yeah, I like how you're thinking about that. It's all about patience, right? I mean, with a $100 billion market cap and a high PE, it's definitely not a stock you want to dive into without waiting for the right moment. So, yeah, spotting a correction in that 200 to 230 zone could be a smart play. It's all
Yeah,
about.
exactly. So let's see how it will turn up, but it is in my list on the data center stocks. I will keep an eye on, and if you subscribe to this channel, you will see regular updates. All right. So we talked about the data center stocks, and let's jump into electricity providers. This US stocks. Let's go one by one and let's see what Copilot says on them, right? All right. So utility stocks. I will start with Nextera. What can you say about the Nextera? Ticker symbol NEE. What do they do? Which areas of United States they provide electricity? Are they data center relevant?
Absolutely. Let's dive into Nextera. So Nextera Energy, ticker symbol NE, they're one of the big players in the utility space. They've got a huge emphasis on renewable energy, especially wind and solar. In terms of geography, they're primarily all over Florida, so the Southeast is their main stomping ground. But they do have projects all over the US, and yeah, they're definitely relevant to data centers because as more data centers go green, they need renewable energy sources, and Nextera is bread and butter. So get stock on your list.
Yeah, I mean, if you look at the stock, the stock price is up 12% year to date. They are at 28 PE ratio, which is a bit high, but they give 2.8% dividend, right? So it's a good one. And if you look at the revenue growth, they are a bit bumpy, but with the data centers coming in, the more electricity will they need, and they will make investments and grow their revenue. They have very good profit margins, like 25 to 30% net margins. So I like it for a safe dividend play. What do you think?
Yeah, has a pretty solid take. I mean, with a 2.8% dividend and those healthy margins, it's definitely a nice stable utility play. And like you said, as more data centers pop up, they're going to need more juice, and that's where Nextera can really benefit. So yeah, I think you got a good eye on that one. Anything else in that space you're curious about?
Yeah, I found another stock. I had two more. Another one is Dominion. Dominion stock dropped after oil rise up, but in the long term, I see since October 2023, I see yeah, a steady price go up in the stock price. Can you explain to the viewers what does Dominion do and which states are relevant if they are data center relevant?
Absolutely. Let's get into Dominion. So Dominion Energy, they're another big utility player. They provide electricity and natural gas, and they operate mostly in the eastern US. So think Virginia and the Carolinas. They do have some renewable projects too. Absolutely. Keep them coming. I'm all ears. It's definitely fun diving into these different stocks and seeing where
is
they
Dominion energy stock is data center relevant?
Yeah, it's definitely got relevance. Dominion's pretty big on the East Coast, and a lot of data centers are popping up around Virginia, which is one of their main areas. So yeah, they can definitely feed into that whole infrastructure. It's kind of a
I mean, especially they call it this data center valley, right? If data centers are there, then more electricity usage will be there. So I think looking at the profit margins and their growth from 2024, I see there is a potential, like especially this pulling back after they reached 80 $68, they pulled back to 60, around 10% pullback. And considering their dividends, I think it's a good time to join in before the next earnings, right?
yeah, I mean that makes a lot of sense. You're basically eyeing that sweet dip as a potential entry point, and you're right. If they're sitting in data center alley and you're taking these pullbacks, it could be a smart time to jump in before the next earnings report, especially with those dividends. It's kind of a nice little offer.
Yeah, yeah, exactly. Okay, the last utility stock I want to talk about is Vistra. Vistra had also pullback, and I think it's a good play. What can you say about Vistra? Which states are they providing the electricity if they are data center relevant?
Yeah, let's talk Vistra. So Vistra is another major player. They provide electricity in a bunch of states. Think Texas is the home base. And they also stretch out to Illinois, Ohio, and Pennsylvania. So a bit more in that central and eastern corridor. They're definitely relevant to data centers as well, especially United Texas, where you've got a lot of tech growth. And if they've had a pullback, then yeah, could be an interesting time to consider them. So you're
Yeah,
definitely running out.
if you look at fundamental, they have $50 billion market cap, a bit high PE compared to others, but I mean, compared to others, this is a bit not so bullish. for me. But if I look at the technicals, I see they are in good position. But I would value Nextera and Dominion first, then maybe Vistra. Maybe making this trio together, having some investments on each one for the long-term electricity usage build up could be a strategy, right?
Yeah, definitely. That's a solid strategy. You're basically building yourself a nice little utility trifecta, balancing the stronger growth or stability of Nextera and Dominion, and then adding Vestra as kind of like complementary piece. It's a nice diversified approach. So yeah, I think you're onto something there.
All right, so we talked about data center stocks, electricity providers, and now let's make a quick index breakdown. Where are we? Where are we jumped from? Is this jump steady, or will we see more drops? So the as oil dropped dramatically from $100 to 85 in the morning, and now it's recovering. We see that's why the recovery from the Nasdaq. But I need to mention here, Nasdaq just dropped below 200 days moving average. It is a critical point. It's a momentum thing. If you are above it, then you will be a bullish, more bullish. If you are below it, then you will be more bearish. So we just tested there with opening. Let this 1.5% more than like around 2%. Then we are rejecting from there. I think people may use this opportunity to sell some stocks to buy from more deep, and I think we may see further going down. And yeah, I will keep an eye on this. I think I will see the stocks that are making dips and find good opportunities to buy for the long term investment. Same for the S&P 500. If let's see if we will close above the 200 days average. If not, the rally can the bullish trend can continue if the geopolitical risks have risen. But we should always consider this oil, right? If oil is up, then everything is down, including gold and US indices. If oil is down, everything is up. So we have this reverse correlation here. If I jump to the gold has a huge correction after seeing 5,400 levels. Now we have dropped in the morning to 4,000 levels, 4,100, and this is, you see, the 200 days average. It held steadily. I think it was a good choice to buy in the long term. With these geopolitical tensions, I see against gold seeing 6,000. Everybody see this moves, they will. That's why I take this opportunity to buy the gold and other central banks, and I think people will buy this gold and hold this gold for the new all-time highs. And yeah, this reaction from the market at 200 days average was important. Similarly, we had a huge drop from silver. In the morning we see $60 levels. Now we jump back to $70. There's a huge volatility here. Again, 200 days moving average was a good solid support. And yeah, I think in the long term at least $80 is viable for the gold, like 8 to 85 dollars. What is your take?
Absolutely, I'm with you there. It's all about watching less moving averages in these commodity moves, and then it all does tie together. Like you said, when oil goes one way, the rest of the market tends to do a little dance in the opposite direction. So yeah, looking at those pullbacks and keeping an eye on those 200 averages is a small move. And hey, if gold ain't dancing around those levels and you get long-term opportunity, that could definitely pay off. So yeah, let's keep an eye on these trends and see where it all settles out. Anything else you want to dive into?
All right, so we talked about so far everything. I gave you the key market news, market outlook, the four stocks I hold, data center stocks, electricity providers, the utility stocks, short S&P 500, Nasdaq breakdown, gold and oil technical analysis. Now, if I see any viewer ticker request, I can also analyze them. Please use this chat box. But so far, I don't see any viewer requests, so I think I will conclude here. So we made lots of stock analysis. I hope this was helpful for you, and it was an interesting experience doing this with Copilot. We had some hiccups, but in general, I think we managed it real well. He gave some uh, news about like the information about the stocks. Then I made the fundamental and technical analysis, and yeah, please subscribe to our channel. You will see also regular updates on the stocks. Please don't forget to like this video and stay tuned.